Hello everyone, Professor Reiko here, doing another direct method example for the statement of cash flow. So once again, remember the direct method only deals when we're distinguishing between direct and indirect. We're only distinguishing between the operating section. The investing and financing sections are the exact same. All right, so now remember, there's a shortcut I taught you in the last one. I'm going to write it up here, but look, that last video with the shortcut and a couple short little, almost like multiple choice type questions. Really beneficial. I encourage you, if you haven't watched that, to go back and look at that one. It will help you on come test time. And it's an easy little multiple choice question to ask. So if you struggle with multiple choice questions, that's one way a teacher can ask multiple choice questions from the direct method. All right, so our shortcut, remember, if we have a current asset, if it increases, we subtract it. If a current asset decreases, we add it. And then the exact opposite for current liability. So if we have a current liability that goes up, we are going to add it. And if we have a current liability that decreases, we're going to subtract it. All right. So go back and look at that where I explained that and showed you how it worked. I might show you how it works maybe one time here on the first one, and then not spend so much time doing that. All right. Meaning proving why the shortcut works. All right. So if you go back to that last video, remember with the direct method, it says start with an income statement number and then adjust it for its related current asset or current liability. All right. So here's our income statement right here. All right. So if you're doing the direct method, you have to be given the income statement. And then notice down here we have some balance sheet information given. All right, so remember what we're going to do. So we're going to do this row and that row. Okay, we don't worry about our subtotals. So we got operating expenses and income. So we're going to have 4 items, all right, that we're dealing with. We don't deal with the subtotals is what I mean by that. All right, so if we think about sales revenue, it's related balance sheet account is current. The current asset is accounts receivable. So we can come down here and see we have an increase in accounts receivable of $10,000. All right, so we know that we're going to subtract that. All right, and then we'll go through each of them. All right, so if we're doing a statement of cash flows under the direct method, come down here where we've got some room. All right, so you would have your heading, whatnot, for your statement of cash flows. I typically let students omit that just for the sake of time, come test time, but always pay attention to what your teacher expects out of you. All right, so then we have the operating cash flow section. All right, so this first row will be called cash collected from customers. All right, so if you go back and look on the previous page, we did a multiple choice question that was cash collected from customers. So it's typically going to be the first row on your direct method. All right, so remember the shortcut. The shortcut says start with a income statement item. Okay, so let me scroll back up here. So I'm starting with this 240 right here of sales revenue. So start with an income statement item, 240 income statement number 240,000, and adjust it for its related balance sheet account. So we have an increase in accounts receivable of 10,000. So we are going to subtract that because that's what our shortcut says to do. All right. So that means our cash number over here is going to be 230,000. All right, so let's just prove that real quick. All right, the 230. So like I said, I'm not going to prove all of them, but just if you didn't watch the last video, although it's important to go back and watch that one, here's what I mean by this. All right, so if we have our accounts receivable T account. All right, so notice here, the last example we looked at in the previous video, it gave us beginning and ending balances. This one just says it's an increase. All right, so it doesn't matter what numbers I choose. I'm going to say, okay, let's make it a $0 beginning balance and a $10,000 ending balance. That is an increase of 10,000. You can pick any 2 numbers that you want as long as it's an increase of $10,000. All right, what else do we know? We know we had credit sales of 240,000. All right, meaning, 240,000, which means we had this journal entry. If we're assuming it all happened in one journal entry, we had accounts receivable, sales revenue, 240,000. I'm going to leave the zeros off just because I'm running out of space. All right, so if we're owed 240,000 during the year, and at the end of the year we're only owed 10,000, that's because somebody had to have paid us 230,000, meaning cash, accounts receivable, 230,000. All right, so once again, none of this accounting right here is hard. We want remember, this is the statement of cash flows, so we're looking for the cash number. All right, down here, notice we have a positive number. That's because we have a debit to cash here. So it all makes sense. It all lines up. So the shortcut works, meaning I could have just done this pretty much in my head and got to the 230,000. All right. So that's that one. All right, so let's go up to the next one, cost of goods sold. So we did one with cost of goods sold on the previous page. All right, the only thing difference here is notice here it says the increase in accounts payable is for the operating expenses, which means it relates to this row right up here. Okay, that's a little odd. Typically, you buy inventory on account, but anyway, a lot of times this accounts payable set for operating expenses should be like, say, for example, like a utility expense, you'd have utility payable. All right, so anyway, meaning accounts payable isn't going to affect this, but obviously the inventory account does. All right, so this is going to be, so what they're saying here is that basically we pay cash to purchase all of our inventory. All right, so we have cash paid for inventory. Now remember, we are starting with an income statement account. All right, so go up here, we're starting with cost of goods sold of 150. All right, so remember what I said in the previous video. If it's a if it's a number that's subtracted on the income statement, you have to start this as a negative number, or else the shortcut will not work. We have a decrease in inventory. That means that's a decrease in the current asset, so we're going to add it. All right, so we get a negative 143,500. All right, but that makes sense because remember this says cash paid for inventory, so that should be a cash outflow. All right, so we could go through and prove that, but I'm going to pass on doing that because we did something. We actually did the little harder version. We had the accounts payable and inventory in the previous example, so make sure you go back and look at that. All right, cash paid for operating expenses. All right, so this one's 15. All right, so I'm going to go through this one a little bit more detail. All right, so come down here. And I maybe should have said this at the beginning, but remember, if you go back and look at I think it was maybe the second video, we talked about we back out all non-cash items. All right, remember, depreciation expense is a debit to a depreciation expense, a credit to accumulated depreciation, which means depreciation expense is included in this number up here, the 15,000, but it does not affect our statement of cash flows. So what we want to do is back that out first when we're dealing with this. All right, so what I mean for that, come down here. So we're going to have our cash paid for operating expenses. Remember, we start with we start with an income statement number, operating expenses. It's an expense, so it's subtracted. And then the first thing I'm going to do is back out depreciation. All right, so why am I adding it? All right, think about it. Depreciation is subtracted on my income statement. All right, so if I add it back, that means we're dealing with 11,000 of operating expenses. So let's go back up here and look. All right, so the 15,000 is subtracted, but 4 of those 15,000 deals with depreciation. So adding it back, meaning the depreciation expense of 4,000 was subtracted up here as part of that 15. If I add it back, it's been subtracted once and added once. That means its net effect is 0, but that's what we want, right? Because we're doing this statement of cash flows and it has 0 effect on cash. So we basically just zeroed it out. So really my starting point is 11,000 of operating expenses. All right, now apply my shortcut. All right, we had the increase in accounts payable for operating expenses of $5,000 right up here. All right, so an increase in the current liability. So we add it. And that's going to be a cash paid of $6,000. All right, so if we wanted to prove that one, this one's a little different than the one we had on the previous pages. Remember, when we're proving it, you always start with your T account for whatever your balance sheet item is. All right, we said we had an increase of $5,000. All right, so remember, we have operating expenses that we're paying for on account. So we have that journal entry. And then we have the cash paid, which is that journal entry. Okay, so those are our 2 journal entries. All right, so remember, the operating expenses aren't 15. This says 15,000, but remember, before it was depreciation, so we're backing that out. All right, so we would have had that journal entry, so we can post that up here, the 11,000 of accounts payable. So if we owe 11 and then only owe 5 at the end, it's because we paid 6,000 of it. So our cash paid, that's a 6, would be 6,000. Remember, cash paid means that's an outflow of cash. And down here, consider we have the parentheses around it signifying an outflow of cash. All right, cash paid for tax. So our last item is income taxes of 30. All right, so what we're looking for here is income tax payable. And if you notice in all this extra given information, there isn't an income tax payable. All right, so this would just be cash paid for income taxes. And basically, sorry, that's a little messy. ES. Basically, what we're saying here is if you're doing a shortcut, there's no related liabilities, so it's plus or minus 0. Okay, so really you don't have to write that out, but just to kind of be consistent. All right, so there's that. And then we have our net operating cash flows, and that would be 50,500. All right, so if we were to do this under the indirect method, we'd get the same answer. All right, but keep in mind, this is just the operating section of the statement of cash flows, and this is the direct method. What we're going to do in the next two videos are do rather lengthy indirect problems that should help you, especially if you have a big problem on the test. If you have a big problem on the test, you might see this, but more than likely, you're definitely going to see an indirect method problem, which will be what we're going to do in the next couple of videos. One thing to point out, if you go back and look at the previous video, remember I was pointing out how, like basically how a multiple choice question would be asked. I mean, you can consider each one of these lines a separate multiple choice question. All right, is one way to think about it when you're doing this. All right, so kind of pay attention to what your teacher is going to expect of you come test time. I typically do the direct method via multiple choice and have the students work a fairly large indirect method problem. Okay, so that's just my approach. So kind of pay attention to what your teacher expects out of you. All right, so that is the direct method, this video and the previous video. The next two will be the indirect method. So hopefully you're enjoying these. Hopefully this helps a little bit. Make sure you share it with your friends. Hopefully it will help them come test time as well. All right, take care, everybody. I'll see you next time.